I'm thrilled to welcome everyone to our second event of this week, a panel discussion on the next phase of Opportunity Zones with Steve Glickman and Ira Weinstein, and moderated by Colleen Galvin. I first want to offer a collective thank you for participating in the Impact Capital Forum, or ICF as we're known, community. I'm Robin Polanski Morrison, or Robin Morrison as it says in my little Zoom box. I'm a member of the ICF board and head of the Thought Leadership Committee. As part of my side hustle, my day job focuses on financial literacy, impact education and strategy, as well as capital introduction. And before we get started with today's panel, I wanted to take a minute to share a few quick thoughts and background on Impact Capital Forum. We started as the Microfinance Club of New York in 2003, and since then, we worked diligently to expand our footprint to focus on all aspects of financial capital, human capital, technology, and natural resources that benefit the world through the lens of financial services. We now have over 3,500 individuals in our network, and we're a membership-based organization. The majority of our members are professionals in the financial arena. That said, our membership is open to anyone who's interested in our mission, which is to advance the impact investing in social enterprise sectors by providing a platform for collaboration and thought leadership. So in our current virtual environment, we've been hosting around 2 to 3 events per month on an extensive range of topics relevant to impact investing in social enterprise. So if you enjoy today's discussion, as I'm sure you will, we encourage you to consider membership. As I mentioned, my fellow board member, Colleen, will be moderating today. Colleen's background is far too impressive in shaping the impact ecosystem, not to mention a few of highlights. Colleen is currently the SVP with Citi Community Investing and Development, where she partners with nonprofits, community advocates, social enterprises to bring the bank's wide range of resources to bear for underserved communities, promoting financial equity and inclusion for all. There's a lot there. We're super impressed. Colleen joined Citi after 10 years with the New York City Department of Small Business Services, where she was an assistant commissioner and held a variety of leadership positions. Colleen joined local government after working on Lower Manhattan small project recovery 2 years following the events of September 11th, and it goes on and on and on. Graduate of NYU Stern in our backyard and serves on many prolific boards. So Colleen, take it away.
Thank you so much, Robin. That resume speaks more to my age than my experience, but I appreciate your lovely introduction. Before we get started with our esteemed guest today, we are so excited to have Steve and Ira here. I would just reiterate what Robin said about membership. As a new board member that has been a member for a few years, there are so many benefits. For those of you that paid individually to join us today, we have such a wealth of events coming up. If you were to attend just 4 or 5 events, you'd pretty much be spending the amount of an annual membership, which is under $100. It's really, really reasonable. We also have a new jobs board just for members. Members have access to recordings of all of our past events going back a few years. So you would be able to see Steve in an earlier Opportunity Zone working group discussion. And you have access to all of the other members. There are a few hundred of us. It's a great, great group of folks. So please consider joining. Today, we have the honor of having the 2 gentlemen who literally wrote the book on Opportunity Zones. I'm just learning that Zoom shows words backwards, but it is not a guide, it is the guide to making Opportunity Zones work. And we're so excited. Just quick backgrounds for both Steve and Ira. Steve is the founder and CEO of Develop LLC, the nation's leading advisory firm dedicated to building and supporting Opportunity Zone funds. Prior to Sorry, bear with me. Having trouble with my screen, I apologize. Okay. Here we go. Through the firm, Steve seeks to positively transform low-income communities across America. He is one of the nation's top OZ experts, a sought-after speaker around the country, which is why we're so excited to have him. He's also the co-founder and former CEO of the Economic Innovation Group, or EIG, which is a bipartisan research and policy organization focused on addressing economic inequality through the creation of new marketplaces for private equity investments in distressed communities. So under Steve's leadership, EIG was really the architect of the $6 trillion Qualified Opportunity Zone program. He sits on Georgetown's Board of Governors, the board of the New Deal, and he previously served in the Obama administration for 5 years as a senior economic advisor. He was also Deputy Associate Counsel of the White House and Chief of Staff for the U.S. and Foreign Commercial Services at the Department of Commerce. So welcome, Steve. Not to be outdone, our tax expert, Ira Weinstein, serves as CohnReznick's managing principal for the real estate and cannabis industries. And actually in the book, they talk about the intersection of those two, which is very interesting. He oversees the advisory, assurance, and tax services for these sectors and develops and executes strategies that grow the firm's resources dedicated to the sectors for the benefit of its clients and communities. So I'd really like to start with asking Steve and Ira to talk about what made you gentlemen decide it was time to write a book on this topic. I would say also it's a really easy read, even if you are not a real estate developer or an investor. For those that are in communities interested in this topic, about 80 pages available on Amazon. The online version's a little cheaper, but I'm old-fashioned. Tell our audience, why did you decide to write the book, and what's changed in community development and in the world since you started on this endeavor?
Steve, why don't you kick it off, because you were the you were the arm twister a bit, although it wasn't that hard to twist the arm.
But you did all the work. So first of all, thanks, Colleen, Robin, and of course Carolyn, for inviting me back and us on to talk about our favorite subject, opportunity zones. We're a big fan of what you guys are all doing in the impact and community development space, and we hope people view the Opportunity Zone program as part of that conversation, both from a policy perspective and a capital perspective and otherwise. I think, what drove us to write the book was the acknowledgement that that Opportunity Zones as a program was a quickly moving target throughout the first 2.5 years of its existence. A lot happened in a short period of time that were kind of thrown on the lap of communities, on states, on financial institutions, on funds and investors. The program was really created in mid-2018, practically speaking. That's when you saw the zones get designated around the country. And we really didn't get a full set of regulations around the program until the end of 2019. And then in 2020, some of those already changed, and they changed again in the beginning of 2021. And coupled with the fact that not only is this a new program, but it's really a new approach to community development and community investing, there was, I think, quite a bit of misinformation in the market, or confusion, or questions. And on top of that, this is a program that's set up, structured differently than previous community investment programs. It's really not meant to rely on either the public sector or even public sector related intermediaries to drive how capital flows. It was really heavily dependent on how investors and fund managers and communities and developers thought from a kind of a ground up to take advantage of equity capital for long-term investing and planning. And that really is a new paradigm. And I think, to the credit of really tens of thousands of people around the country, there's been quite a bit of uptake on how to make this program work, but it also overlaid with the politics of Democrats and Republicans in DC. So we thought there was just tons of issues to sort through and try to diagnose. And our goal, I think, was to create a guide that was really accessible to people, particularly people who may not have a ton of resources like the terrific advice and guidance that CohnReznick can provide, and law firms around the country. We wanted to provide something that would at least be an entry point to this marketplace for lots of different types of stakeholders, and try to correct at least some of the lowest hanging fruit questions people, or answer them and correct some of the misinformation we were hearing, to let people feel some level of comfort in getting involved in this marketplace, because we're really excited by it, and we think it's very exciting for communities across the country.
Yeah, and Colleen, I would just add, first of all, a thank you as well for including us, particularly me, as I am a member, and I've enjoyed the content and all the great work you guys are doing. So really honored to be here. You know, everything Steve said, I mean, it was a labor of love, but there was some labor involved. We really did feel when we launched this like it was needed in the market. They're just, as you described it, Colleen, it was the easy read that was missing. We didn't want a technical treatise, but we wanted something that had some practicality. We also realized that to make it effective, it was going to be an undertaking. And in the course of that undertaking, a lot changed in communities all over the world, and particularly low-income communities in the United States, and many of those that were designated as opportunity zones. So I think that what we went through, what we wanted to incorporate versus what we added to account for the fact that, and Steve knows this better than just about anybody else, sort of how this concept was, this idea was conceived and why it was conceived, and, you know, coming out of some economic circumstances that we didn't expect we would revisit. And lo and behold, before we were really able to absorb those final regs, things had changed pretty dramatically. From a sort of social, economic, public health standpoint. So I think the need became greater. I would say, having sat in some of those meetings around the country where the misinformation was contentious. I mean, you would sit in meetings where there was just arguments in communities about the value of doing this. And I guess Steve and I were the mindset, I hope like many people, that let's not let the perfect be the enemy of the good. There's a lot that we can do with this, and we really need to work together to figure it out. And that was really, I think, what drove a lot of what, you know, we were trying to achieve, or what we hope will be achieved in the market, and that this book will play, you know, some small part in that. And I think that I sort of feel like what's happened has changed a lot of people's perspective on things, maybe even some that were not as interested in opportunity zones or as appreciative of its value as an idea, and that people are taking a bit of a longer term view on things, a bit of a little bit more sort of socially conscious view of things, if you will, and that they're willing to think about things a little differently than maybe they would have 14 months ago. So that's something that we hope will certainly be the case. I also think that we've seen, I think, a lot of change, and I know you're going to want to get into some of the details. So maybe I'll leave it there for now.
Thank you for that. I know when we prepped for this, we talked about this this climate of scarcity at the city and state level in particular, and the fact that this program is not dependent on the traditional levers from the government may be an advantage at this point. I do hope you are right about people thinking differently. And I definitely want to come back to this question of misconceptions from folks in community advocates. But before we go there, I'd love to hear from either of you how you would like to see things, how will the Biden administration embrace this, and what can happen from a policy perspective to get more traction on opportunity zone projects?
Ira, you want to take this one first?
Well, I'll just start by saying that I think there were many that thought the administration wouldn't embrace this. And I always thought it was certainly inconsistent with the way we viewed things. I think they're going to have a bent that is more towards trying to create measurable impact and impact around things that are not purely financial. And that creates some tension, I think, but I believe that that's an appropriate approach from a governmental standpoint. I also think, however, that there's probably going to be a reluctance to try and, rewrite the rules or do too many things that are going to change what is hopefully a pretty good trajectory. So, the basic things like, getting some better reporting and transparency to what's going on, I think are natural progressions that the administration will support. But I think they recognize that it's kind of tricky to sort of rewrite the rules before you've even really seen what kind of an impact you can have. And there is a lot of activity, or at least a lot of money moving. I think what's interesting is that a lot of people looked at this and said, well, we'd love this to be regulation light, to not have the guardrails of some other programs, to have sort of unfettered, opportunity, if you will, or at least significant opportunity to just do what the market will bear. And then all those people, as soon as they saw the statute and then, wanted regulations that were a whole lot heavier than anybody expected would be necessary, there's just a point at which you can't keep playing out that sort of governmental process without letting the market do things that I think, if the market includes everybody, and I think the administration sees it this way, not just the financial side of things, but the entirety of the market, which gets to the way we wrote the book, the chapters, and how we set it up. If everybody is collaborating, that will create some level of momentum and success. And so I think that they're going to embrace all the things that should be embraced. And I think they're going to challenge some of the things that probably, should be reconsidered. But I think that the former far outweighs the latter.
Yeah, I'd add a couple quick things. One, I think it's worth pointing out that the most important policy making and organization around this is really happening at the state and local level. The federal government has done a lot of what it's going to do in terms of creating the framework and the rules of the road. And from that kind of starting point, you're going to see, I think, more and more local creativity around this. You've seen, for instance, states adopt their state capital gains taxes to this program almost across the board. The first state to do that was New York, for all of its critique of the Trump administration's tax policies in general. California still hasn't, so they're a big outlier, but there's all sorts of issues in California they're trying to get their head around. And increasingly you see this interfacing really directly with how localities look at land use policy and development planning and a business, retention and recruitment. And so I think it's increasingly going to be a part of that conversation. I'll point out just quickly, what I think is amazing on the national level is, keep in mind, this was a program that was heavily used in the Trump administration's reelection strategy. And it was a big part of their agenda. And it was critiqued heavily by most papers out there, particularly the New York Times. I mean, they ran a couple of front page stories. I remember talking to a phalanx of investigative reporters, one who had won 3 Pulitzer Prizes, who was trying to look for a way to tie this to some broad conspiracy in the real estate industry, which I don't think they ever found, but it became fodder for front page news. And even with all of that context, this was one of the first things that Vice President Harris talked about when she became the nominee, speaking specifically to Black voters in Wisconsin. You can't pick a more important constituency there. And it became an explicit part of the Biden administration economic agenda. They obviously want to put their own spin on it. They want to make improvements. They want to tie to, I think, racial equity and racial justice and community development and small business and entrepreneurship and renewable energy and infrastructure and other things I'm not mentioning. And I was pretty involved in those conversations with the campaign. But which is to say, this is a very flexible program. It is a blank canvas that's meant to it's really just an alternative way of getting long-term equity into the conversation from the private community, hopefully from both individual investors and institutional and corporate investors. And we all, it's upon us all, whether we're public policymakers or investors or community leaders, to figure out a way to tap into that for the stuff we care about and think is important. And ultimately, at the end of the day, that's what this program is going to become, however we decide we want to engage. I'll say one other, nope, I think this is your next question, so I won't say anything more.
About the what projects are going to come of this. We talked in our prep about the fact that all the money is sitting in these funds, but we don't have a lot of projects deployed, and that you gentlemen would really like to see a diversification of the asset classes. So should we talk about that?
Sure. Let me, Ira, can I make just a quick segue comment, and I'll just turn it over to you. One of the things that I think worth recognizing is that there are a lot of questions about whether the program's been successful or not. And I think both of our answer is it's early, because I think, for your point, Colleen, this money is really sitting, waiting to be invested, mostly because it reflects what's happening in broader private equity market trends, which is a lot of dry powder. Let's see what happens with pricing, and let's see what happens with the economy. But a significant amount of money has been raised, and there's no definitive data on this yet, but I think we would both be comfortable in saying tens of billions of dollars have been raised in the first 2 years. Maybe it's as high as 50 billion or more. And if you look at other community development programs like New Markets, which is the largest single tax credit program in that space, it's raising in a typical year, until very recently, $3.5 billion a year. So this is a huge, this has become a huge allocator of community development oriented capital in the markets. And that in it of itself is a pretty interesting, I think, achievement of being able to tie private investor community who may or may not be community development oriented with the designs that we've seen from the federal and state and local governments. But I'll leave it there to Ira to maybe segment a bit further in what we're actually seeing in terms of, you know, market trends and what we hope to see this year.
Yeah, I mean, I think that there's no question that a lot of what's happened to date has been real estate related. So certainly and a lot of it has been housing, which is certainly in great need. So I think that's a good thing. But I think ultimately the ability for opportunity zones to be used in all kinds of different instances, the diversification, Colleen, that you alluded to, I think that's across the real estate asset classes and also across a host of operating businesses. Steve mentioned a bunch of them that I think are the focus of many, and in particular the administration, in terms of what they want to encourage. We're just not seeing as much, but I don't think that, to Steve's point, at this early stage, that's a bad thing or a problem. I think that, you know, in a place-based sort of a situation, you're going to see real estate be, and just given, you know, kind of what it is as a framework for the rest of the economy, you're going to see that be a predominant use of the program. The key, I think, is getting folks comfortable that you can do lots of other things with it. And I think that will happen. I'm encouraged by lots of things that we hear, both what we're hearing about, but who we're hearing it from. I think there's just a broader range of folks talking about this and thinking about this. Last week, in this forum, you know, Greg presented the Hempstead project, and you know, that to me is brilliant, because for a lot of people, it's about the transaction, and OZ, they want it to be like, you know, the found money that somehow does something you couldn't otherwise do. That was never the intent. But if you think about it as part of a framework for so many other things that can happen to help build a community, and the notion of a community is this larger sort of system that's going to be valuable for many different reasons, but being able to not assume the OZ just solves every problem, but is part of solving kind of the larger challenges that may be faced in getting more economic development accomplished, and being able to tie this into this larger framework that includes other tax credit programs, other things that could be public sector driven, private sector driven, but being able to sort of pick the spots and leverage the, you know, where there are strengths in a particular community and how you can use that as a means to make a bigger long-term difference. And I think OZs just play this really interesting role where, you know, it's not going to work in every situation, but it can work really well if you're taking a very sort of concerted kind of big picture view of things, and if the parties are collaborating. Because I think that's the key. I think that's part of what we try to convey in the book, is that if you're taking, you know, sort of staying in your lane, you need to understand everything there is to understand about how that pertains to opportunity zones. But the key is really understanding the whole rest of the highway, right? All the lanes around you, and figuring out how is that going to work for us, not for me, but for us. And I think that's where we're starting to see some really interesting ideas that are coming together, and where institutions, it could be large public or private sector institutions, philanthropic, where they're starting to want to be at the table to think bigger about how to do things, and where OZs can be part of that.
That's super. I'm glad you brought up the Hempstead example. Anyone who is not already a member, if you join as a member, you can pull up that session. I love it because personally, I live out on Long Island. I was excited to hear about such a well-intentioned, well-designed program in an area that really needs the investment. I do think it's interesting, as we had talked about last week, that it seems that secondary markets, smaller cities, rural areas, are more primed to leverage this than the big urban markets in like LA and New York, because it's so complicated. I just want to take one break to remind everyone we are going to save about 10 minutes at the end for questions. So if you would please enter those in the chat or the Q&A, Robin's going to read those off toward the end of our session. Thank you. I love in the book how you go through each of the stakeholders, right? The real estate developers, the role of the fund managers, the investors, and as you said earlier, Steve, the investors may or may not care about community benefit, right? They have other motivations. In my day-to-day, as I mentioned, I come across a lot of that skepticism and misconceptions we talked about earlier, and I would love to take a few minutes to talk to the community advocates in our audience, for folks that either live in opportunity zones, have an existing business in opportunity zones, or are representing those communities and are really skeptical and concerned. What can you tell them about why they should keep an open mind and what works best and their role in community for making sure this happens the way it should?
So I certainly think the most important stakeholders here are the communities, and that the places you see who have been able to make most use of the program that success has been driven by local leadership, either policy stakeholders or community leaders who have used it as an opportunity. And I think you've seen a lot of this happen to both develop and align a 10-year vision for places, many of which haven't had that, and figure out a way to use this to create momentum and enthusiasm from both the public and private sector for doing a whole set of things that a lot of communities have needed to do for a while. I think this program is designed to be controversial. So controversy doesn't either surprise me or offend me. And it's shown to surprise or offend anyone. So I'm going to start by making some controversial statements, which I don't think are that controversial, but I'll say them anyhow. Existing community development approaches aren't working. We have, for the most part, a geographic map of inequality that looks the same like it did 50 years ago. Continuous decline and downward spirals in many places. And increasingly, I think the public sector is not a sufficient tool on its own to solve this problem because of where budgets are heading, because of where the political will is in this country, and because of the scale of the problem here. So in my view, it's uncontroversial that we need the private sector to engage, and the private sector has not been very good at engaging. So the design of this program is to create a marketplace where capital can be put towards any number of things. And just like any other program where the government is trying to get the private investor community to move, not everyone's going to like every idea or goal or project that people have. I mean, do I think every form of philanthropic giving is equally impactful? No, but we have a massive tax incentive to convince people to give to charity at scale and to be rewarded for it in their tax filings, without having to decide that on the nature or content of every project. Do I think everyone should buy a home and should be in the market to buy a home? Probably not, but we have a massive tax incentive to make people homeowners. Do I think that everyone needs to buy an electric car? Well, I probably do, but not everyone does, and we have a massive incentive to support buying of electric vehicles or clean energy or any number of things. So I think it's perfectly appropriate to have an incentive to get people to think about geography, and particularly low-income places as a place to put their next dollar in. And I don't expect everyone to have a community development goal in mind when they're thinking about that. And it doesn't matter to me. It matters to me that one, that there's lots of capital that we can tap into, and two, that you've got a network of fund managers and community leaders who are creating the ability to put those in projects that are moving the needle. And the practical reality on the ground is that if communities are not supportive of projects, particularly when you're talking about real estate or infrastructure, they're not going to happen. I mean, there's a tremendous amount of local political control over how those decisions are made. And if you talk to community leaders and mayors in particular around the country, but particularly in the middle of the country, they really love this program because they don't see another way easily to tap into capital markets to solve for the things they're looking to solve for, which may be building housing, or maybe revitalizing their downtown, or might be creating new centers for entrepreneurship, or new business growth, or anything else that they may be trying to do. So as long as those community leaders are excited about this, and the Conference of Mayors every year has made this a key priority, then I think we're on the right track. it doesn't mean there's not a lot that has to be done by all of these different stakeholders to make this program work. And the goal is for this to be a permanent part of the tax code, where every 10 years there's a new group of communities that are chosen by same or similar criteria. But it does mean that I think we don't have a lot of alternatives for how to drive private capital. And this is I think a pretty good starting point, and we should collectively try to see how we can make this work and then evaluate it down the road. And hopefully we got enough of this right at the end, because it is a big experiment. There's no doubt about it.
Yeah, so I would say I agree with most of what Steve said. I'm gonna disagree with the premise where he may have been wanted to be a little controversial. The idea of what's working or not working for community development. I guess as a firm that spends an enormous amount of time in that space, I would say that things are working in the sense that the tools we have do what they're capable of doing, and maybe but for those tools, things could be a whole lot less, have been a whole lot less impactful. So that, unfortunately, you have to look at it and say, well, not where are we, but where might we have been had some of these tools not existed? And then OZs sort of fold into this in saying, where can we go? And the where can we go, I think, gets to this idea of how do communities sort of take the reins and say, we don't want these tools to be out there and for folks to just come in and do what they want in our community. We want to be a part of the community process. And I guess part of this is, and we kind of grapple with it a little bit in the book, but it's a big deal. Who's the we? Even when you say community, it's not a monolith. So this idea of what makes up the community, who are the stakeholders, are they in agreement on what makes the most sense? The hope, though, is that if the community, however it gets defined, is thinking about things in a collaborative way so that they can then be collaborative with the other stakeholders, it gives them a level of leverage over what's going on and an ability to have a much louder voice, even though, to Steve's point, there can be so much more capital coming to support the things that everybody wants to accomplish. And the hope is, too, that it's relative, whether you're in large metro centers or, small rural parts of America, that hopefully there's a scalability of all this that everybody can figure out. I think that for us, our community development practice is the biggest part of our organization. We have a pretty big financial services practice, and we've struggled as to how to bring those two groups together, us internally, our client base, and thinking about where does community development meet, our financial services lens, which is, hedge fund, private equity, venture, all these other kind of vehicles. And how do we bring them together? I think you bring them together around this whole notion of impact investing, however you want to call it or define it. Opportunity zones becomes a much more kind of specific, concrete way to do that. And I think it becomes a means to a much bigger end if it gets people sort of to really think differently about what's possible. And you start to have some real momentum there. I also think that if you isolate certain geography where there is some market forces that can really take root in a more significant way, I think this goes to a point Steve made earlier, it allows you to then focus your sort of more limited fiscal capacity as a locality in other areas that might not get the same sort of private sector interest. And I think that notion of how to redirect resources starts to become a more complete economic development approach. And I think opportunity zones help shift the focus a bit. And if people gravitate towards that, I think you can do some really cool things. And I think we're already starting to see that. So that's where it starts to get, really, really interesting. But the key, I think, is the community being able to sort of exert some leverage, be not just a consideration or, a small part of the conversation, but a much bigger part of the conversation and helping to drive the success of everything, which goes to that longer term vision. And, when Steve mentioned a critical point early on about the federal government having done a lot of what it's going to do and this becoming a more local state, but particularly local policymaking effort, that's where I think you can really leverage this pretty significantly. Some of the concerns that community stakeholders have expressed, displacement, gentrification, these things that, I think a lot of people are sensitive to, there's local policy efforts that can sort of mitigate a lot of that activity, and I think still create some really interesting upside for investors.
Thank you. I'd love to talk at some point after this about what you said about trying to bring together co-residents, financial services, and community development practices. That's very interesting to me personally,
Sure.
and a challenge within big banks like mine. Just one more question, and then I want to turn it over to the audience. Ira, maybe you could talk to us about this moving target of this IRS deadline and what that means for investors, and how folks can take advantage of that.
Well, the fact that it's a moving target, I think some have viewed as a very favorable thing. And it's, it's viewed by the IRS as relief that's being granted. And I think the initial reaction is, oh, that's great. Because for those that had money in a fund and, they're just going to buy themselves more time to maintain compliance. I think it's relatively straightforward as to how that would work, and the fact that it just gives folks more time. The concern I feel and that we're seeing is, does it take the pressure off of folks to move money actually into projects? I think that's been a whole lot slower. So all the data that's out there really is on what's been invested in a fund or funds in the aggregate, as opposed to where it is and what it is within certain assets or asset classes. Now, there are folks tracking the asset class data, and as a percentage basis, I think we all understand the spread across real estate and other asset classes and the like, but there seems to be some misalignment there between what's sitting in funds, which is very, very significant, versus what's getting into communities and how quickly. And so my concern is simply that if we continue to have relief, albeit something I understand in terms of just everything we're dealing with, the pandemic, all kinds of economic implications, whether or not that sort of just allows people to not be quite as motivated to be as focused on, how to deploy dollars. There are legitimate reasons why things are just delayed, and there are challenges to, moving money and, things that need to be addressed that could be governmental processes, entitlements if it's real estate, other things. There are all kinds of challenges with, I think, people just managing the risk associated with something in this environment. On the other hand, I guess I just feel like the relief is good up to a point, and then it just maybe makes it that much harder. Steve made the point earlier about being able to look back and measure this at a point in time in a more effective way. It just kicks the can down the road a bit as to when you can measure, but I understand why it's happening. I don't have a good answer other than, I think you take advantage of the relief as it helps benefit your circumstance, but do it in a responsible enough way that hopefully we're still moving a lot of money into communities to do the important and hopefully valuable things that are needed there.
So could there be, or should there be, more pressure on fund managers to deploy? Is there any mechanism for making that happen?
Steve, I don't think there is, and I don't want to I'm not sure I would want the rules or changes to them to force anybody's hand, and I don't think the pendulum will swing the other way. I think we're just at a place where people are reacting in, I think, an understandable way to the circumstances. So I think, the relief is what it is, and it buys some time. I guess it's more, the thoughtfulness people have as investors in, is this just a deferral strategy to then see what pans out, or is this truly something changed and the money's there, it's very well intended, we know where it's going, it's just a matter of when is it going to get there because something's been delayed.
Steve, I'll give you the final word and then we'll go to Q&A.
There's never a final word on this topic. Although Ira disagreed with me, I don't disagree with anything he says. I agree with all of it. I think I retract my
disagreement then.
I think the community development activity is totally necessary and but not sufficient. That's basically my perspective, and I think it's hard to debate. Although I like to think my perspectives are hard to debate in this place. There's, putting this program aside, OZs, and I think Ira made this point, OZs are not a silver bullet. They're really a starting point to focus people's attention on a really hard problem. And that hard problem involves not only everything we've talked about, but lots more. We certainly need more affordable housing in more places. We need to make more places livable, more places attractive to entrepreneurs and businesses. We need to make sure we have, more access to schooling, more connection between cities and anchor institutions. These are big problems to solve. I think the reality is that we have to get around is that the government is not, either doesn't have the bandwidth or the will to solve this problem in the way it may have had decades ago, where you had real local, a focus on local policy approaches. You had maybe corporate champions in communities. A lot of that has changed in the way our, economy is set up and how companies are incentivized. And so if we're going to solve this problem, it requires, regular people and community leaders and average investors working together to reinvest in their own communities. And I think there's plenty of market reasons to do that. I mean, the coasts are expensive. They're too expensive. We're starting to hit upon the tension there as you see tech companies, for, I think, probably totally selfish reasons, but regardless, moving from places like San Francisco to places like Texas, where I think COVID and the pandemic is an opportunity for people to reset, figure out what's important to them, and do they want to be paying $3,000, $4,000, $5,000 a month, to live in a tiny 500 square foot place, or do they want to be closer to maybe where they grew up, where their family is, where they're going to have a bigger home, and figure out how to make that work. And if we don't solve this problem, and this used to be a bigger part of my pitch, I don't know why it's not more these days, maybe because I'm psychologically broken on the inside in recent months, but these economic questions are completely tied in with our political chaos. I mean, what makes, I'm gonna be political, I promised I wouldn't be political, but here I am again. What makes Trump an attractive candidate? What makes Bernie Sanders an attractive candidate? They are talking about real challenges that people agree with and recognize. I mean, there's an imbalance in power, and imbalance in economics, and imbalance in people's opportunity, and people are really upset about that, and they should be. And our system is not responsive to that in the right ways. But it's very dangerous for our country, because in that unhappiness and dissatisfaction, you get alternatives that in at least those cases, I think, can be quite destructive to what this country has done and can do. And we need other ways to solve that problem. And if we don't solve it, I think the political situation will get much worse around the country. I think we're at a tipping point for that. So maybe I don't talk about it because it's hard to believe it can get worse, but I think it can get worse. And I don't think we have that long to figure it out. To me, I view this like climate change. If the biggest existential question to the globe is climate change, and people may or may not believe that, I certainly do, the biggest question to our democracy is economic inequality, viewed much more broadly than we've been thinking about it before. And if we don't really solve that aggressively, with opportunity zones are like a small part of this, dramatically change the way we train people, the way we provide opportunity to jobs, the way we build infrastructure and homes in this country, we're not going to succeed. We're going to have a really tough time. So I hope this drives people out of their comfort zone, and I hope it stirs up a lot of the creativity we've seen over the last couple of years and will continue to see in years from come. And I hope people get angry, because as a result of this and all that we're seeing, and that makes them want to engage in this bigger question of local community development around the country. That's an essential part of the puzzle here for me.
Yeah, and I would just add to that, Colleen, just quickly. I mean, I think that what's always been interesting, and I don't think this is only in the case of opportunity zones, a lot of these community development tools, the notion of trying to solve some of the issues Steve's talking about are pretty bipartisan. Like, it's hard for people to disagree with fixing some of that. It's a question of how many people are actually going to roll up their sleeves and make it happen. And I do think that if we think about opportunity zones as a part of that whole process, I do think that there's an appeal here that can be, it can bring people together. I do really believe that there's this idea that the role that different institutions have to play, particularly large profit-seeking institutions that are in a position to impact the capital flow and to think differently about where things can be impactful, but why and where they can also be very beneficial to those organizations. So, this kind of double or even triple bottom line notion, I think, can get really, really interesting. I think it's been a little bit of a cottage industry for a while, and I think opportunity zones has a chance to make it a whole lot more than that. And that, there's this big challenge of, for a lot of people, at least the mindset of, is this one or the other? You either do something good or you do well. Well, why can't we do both? And I think there are a lot of opportunities to do both. Opportunity zones won't be the answer in every case.
Right.
But there are these instances where opportunity zones can play a role if people are willing to be creative. We've seen some creativity in specific transactions and in what I'll call the master planning of some communities where people are willing to come to the table. It's not an easy process. It's not a short process. So people have to have the staying power and the willingness to have that long-term view at a time when money is really cheap, but it's not as available to everything and everybody. So let's take advantage of that. Let's sort of leverage that, and let's find some ways to kind of make some bigger differences, because I think that's what we're really on the cusp of.
And I agree, Ira. If there were ever a time to bring these two motivations together, it's now. I think, Steve, if many of the folks in community even knew that what they consider to be a Trump era policy was orchestrated by someone who served in the Obama administration, they might even feel differently with that alone. I do want to encourage everyone to submit questions. It's not every day we get to access talent like this. And I think, Robin, you had something come in on green.
Sure.
Yeah.
I'll kick it off while everyone's thinking of some great questions for you guys. Let's go back to the book for a second. In writing it, it's no small feat. What surprised you the most that you maybe weren't expecting in that process? Something uncovered about OZs or anything in general?
Maybe that we could complete it.
Fair enough.
I think one of the things that's challenging about OZs as both the marketplace and trying to write about the marketplace is it touches so many avenues. It touches really so many different asset classes, so many different types of investing, so many different types of investors, so many different types of communities. There's a lot in it. And I think there were many points we found ourselves down rabbit holes we had to crawl back out of in order to get back to our 10,000 foot goal here, which was to provide a starting point and not an end place for different stakeholder groups to make this market more accessible. I was hearing the back and forth, Colleen, between you and Ira about whether or not we should make this more challenging for developers and funds, and put more pressure on getting capital out quicker in the marketplace. If you talk to fund managers, they could easily get overwhelmed by what's the regulations and the rules around this program, which is interesting because if you oftentimes hear, I think, particularly from folks in the community side, they'll say there are no guardrails in this program. It's like the Wild West. And in ways it is the Wild West in that, you've got 1,000 opportunity funds. They're almost all first-time entities, some of which have track records in private equity or venture capital or community development. Many don't. And so you're creating a lot of new players in the market, and that way it is the Wild West. But there's a tremendous amount of regulatory structure built around the program. And this is a hard program to engage with. I mean, the hardest part about this program is, and we ended up writing about it, but not a ton, is connecting capital, which is not very transparent because you have to identify capital gains, which is hard to do. And particularly hard to do because many investors in traditional community development are institutional investors that are not taxable, and connect them with projects in places they may not intuitively care about, but where there's an opportunity for them as investors and there's an important outcome for communities. That's a very complicated piece to solve. I think we probably just scratched the surface on it. But to Ira's point of the conversations happening around the country, and I think this is true even from critics of the program, when they pointed with thing that I think everyone's surprised about in this program is how much hunger there was to create an action forcing event to have these conversations, and how much it's happening around the country, including in places that have had a lot of success, who I think you would argue didn't have a lot of hope to see a lot happen in the last couple of years. Ira's hometown of Baltimore has had a lot of success and had a lot of challenges. They're using it to redevelop, for instance, the train station, Penn Station in Baltimore, as well as build tech companies right in the center of the city. And in a time when I don't think Johns Hopkins had a lot of connection with the city. Erie, Pennsylvania, arguably the poorest city in the country, is using it to redevelop its entire downtown and has raised tens of millions of dollars, not just from their big insurance company, but now from outside funds and outside investors who are engaged. Birmingham, Alabama, and the state of Alabama is probably one of the most successful examples I'm not sure why that doesn't surprise people more. When we were looking at the economic data of the country, Alabama is like dead last or second to last in terms of its ability to both attract investment and deal with issues around economic growth and economic inequality. And they're attracting billions of dollars to projects in places that are quite difficult to build in. If those places can do it, and if you ask people in Birmingham and Erie and Baltimore, they'll say, I think the same thing. Anyone can do it. It just requires the will to, I think, use this as at least a starting gun in the planning. And the amount of examples I think we uncovered in thinking about this more is probably the thing that most surprised me, is really hard places are taking on a really hard program and having success.
Yeah, and I would say, so it's probably the same thing, a slight variation. I mean, I learned a lot writing the book. Like, we went into the book writing and thinking, well, you know, we're the experts. And I have to say, I learned a ton going down the rabbit holes that Steve mentioned. And there was a challenge certainly in not getting too technical and learning not just about some of the examples Steve gave about where people are having success, more importantly, why they're having success and how that's applicable elsewhere. I also realized how complicated this can become if you let it. Like, at some point, and I think the reality is this is kind of a simple idea at its core, right? And it's based on a very fundamental premise around trying to address inequality. And yet, even regulation light as it is, or heavy as it got, it can get really complicated if you let it. And I think that sometimes just don't let it get that complicated. Just understand and appreciate how it can be a tool, make sure it works and it's compliant. And we learned a lot about that as we went through the process, about how to sort of think differently about just the use of the program.
That's fantastic. I hope that you're planning, you know, a second edition in a few years, maybe sort of like what's developed as a result. What are you seeing around the country? Additional projects? We can be hopeful. I think we are short on time. Unfortunately, I don't know that we have time for another question. We only have a couple of minutes. Do either of you gentlemen want to make a final statement before we close?
I just thank you for having us. This has been fun.
Thank you so much for your time. Thank you for writing the book.
Yeah, I just encourage people to engage and be patient. Where this is not, these problems are going to take not 1 or 2 or 5 or 10 years to address. They're going to take decades. But you know, the moment to jump in and be a part of this process is now. And I think, as someone asked a question, you know, the seeds now, I sincerely believe the seeds we're all planting in this, no matter what we do, whether we're engaged in OZs or engaged in community development, are going to bear fruit in the years to come. There is a turning point happening in the country, but it requires a patience. That's hard these days and age of immediate gratification in how you get your news or engage with people or look at, you know, the political atmosphere. But we all need to be patient. I tell myself that all the time because I'm the least patient person that I know.
Well, and I would say too, I mean, let's all do this together. Let's sit around the table. Let's not sit across the table, and let's really work on doing some cool stuff, because I think there are a lot of very mutually beneficial things to be done, as opposed to things where there has to be a one side of the trade or the other, kind of a winner and a loser. I think this is a much more around the table kind of a thing. And I agree with Steve, now's the time. So I look forward to finding ways to work with all of you.
Thank you so much. I hope that our audience heard loud and clear your patience, your perseverance, and really making this work for everyone. It was a great session. I wish we had another hour, but perhaps we can bring you back for an update.
That'd be great.
I love that. Thank you, guys.
Thank you, gentlemen. Thanks, everyone. Thank you,
Bye.
Robin.
Thank you.
Bye.
Bye.